Hello everyone. I know this is a video after a long time because guys I was very busy with my mentoring program because you all know that was my first mentoring program, so I just wanted to make it the best of mine. So I was really busy with that so that I couldn't upload videos on YouTube. Guys, here in this video, I want to give you an information that here in this video, we'll be discussing about Camarilla Pivot, which I've promised you that I'll do. Because I know there are many people who couldn't attend my mentoring program because there are a lot of reason for that. So for them, I'll provide the link in the description so you can get all the videos of these 10 days and you can watch all the videos. I'll provide the link in the description so that you can watch all the videos which I have taken. Okay. And guys, so here I've already told you that we are going to discuss about Camarilla Pivot. And one more information which I need to give you is that I'll be uploading one more video that will be completely based on your interest. That may be either EMA or L Trimbles or CPR. Okay, that may be completely based on your interest. So you can comment which video you want. Okay. So that will be uploaded within a week. So that's what I need to tell you. So now let's get into the topic. Okay guys, so I will discuss the setup in this video. So actually what happened on last day, due to an emergency, I had to stop this session in between. So I promised you that since the next session will be coming on after 4 days, I'll be discussing the setup and I will be posting the video so that you can watch and you can practice for 3 to 4 days. And in this session, whatever doubts you're having, okay, we can discuss so that we'll go as per the plan without any, changes in the plan. So here in the setup, what I'll be focusing on is the Camarilla Pivots. So we will be discussing about the Camarilla Pivot based setup. So when I discuss this setup, you don't want to have any confusion in your mind related to the other setups that we use. We use VWAP, we use 20 EMA, we use 200 EMA. So there can be some contradiction with respect to these. And all those can be cleared only after we complete these discussions. Okay. So you don't want to have the confusions with respect to other indicators. We are going in a systematic order. I am discussing the Camarilla Pivot as of now. So anything connected to other indicators will be clarified over a period of time when we proceed further with the coming session. Okay, when we discuss about all these and those setup and those indicators and everything. Okay, so that you need to keep in mind. And now let's discuss the setup. Now here what I'll do is I have to discuss in 5 different ways. So 5 different scenarios I'll be discussing, and that's the reason why I'm keeping this whiteboard. For the first 15 minutes, I'll be discussing these 5 scenarios theoretically using this window, and then I will move to the chart because it is impossible for me to show and discuss the 5 scenarios in a stretch without wasting time in the chart. So let's see the situations here and then we will move to the chart and we will explain. Okay. So at least what happened today or last 1 week we can look for. Okay. Now these are the scenarios and let's say this is your R3. I'm marking it as a red color and then this is your S3. So this is what I'm looking as Camarilla Pivot. So how you need to plot in the trading view, then how you're going to plot this in Zerodha, everything I'll be discussing. So okay, I'll discuss by showing the applications after completing this. Now assume that this is what your Camarilla Pivots. Okay, and we don't want R1, R2, R4. We don't want S1, S2, S4. So there will be basically a pivot and then there will be R1, then there will be R2. Same way, there will be S1, S2 for Camarilla Pivot also. These will be there. But we will not be considering these R1, R2, S1, S2. We will only look at R3 and S3. And we'll be taking 2 kinds of trades, that is support and resistance. So in simple terms, whenever the price comes to R3, you will take a rejection trade, okay? And whenever the price comes to S3, you will take a support trade. So this is what the basic principle is. Now listen to this very carefully. The price comes to R3, you will be taking a put trade. If the price comes to S3, you will be taking a call trade. So what are the different scenarios that I will have to discuss? Now guys, any resistance, let's say this is the resistance. First time what you expect a rejection. So you look for a PE trade. Now any resistance, if it is broken, if this resistance is broken, then this resistance, previous resistance will act as a support. So let's say if this resistance is broken, then if there is a retracement to that, this is going to act as a support. So this can turn to be a support. For example, if this R3 is broken, we are expecting a rejection from R3, that is a higher probability. But if this is broken, then we'll retrace this and then this can be a support. So you can take a call trade. Similarly, if there is a break of S3 like this, if they break S3 like this, then by any up move retracement, what is expected? Further rejection. Because this support will act as a resistance. So this is some simple support resistance theory. Any support, if it is broken, it will act as a resistance. Similarly, any resistance, if it is broken, it will act as a support. Okay? So this is simple basic theory. So you will be getting 4 different trades. Okay? So here, first we expect a PE at resistance. So you will look for a rejection. But if the stop loss is taken and they break this, you can expect a support trade. Similarly, once it comes to S3, we look for a support trade first. But if it is broken, then we will look for a PE trade on retracement. Okay, on retracement, if this again, you will enter. Now, what are the different other situations? So this is a basic thumb rule. I'll repeat again. This is your R3 and this is your S3. Okay, so what is the first scenario? I will use 4 different colors to show this. First scenario, price came to R3. What is expected? You will look for a rejection. So, we will look for a PE trade. And I told you what are the different candlesticks. 2 important candlesticks we'll discuss. I'll show this again the candlestick. But now let's understand this. So, this is what the rejection trade. Now, let's look at the support trade. So, once it comes to S3, what will happen? We expect a bounce. So, we go for a call option expecting a support. So, I am discussing from the perspective of a buyer. As a buyer, you are buying PE. As a buyer, you are buying CE at the support. Very simple at R3, S3. Okay. Now, there are other things which need to be taken into consideration. Now, let's see. As the support resistance rule R3 is broken, then what happened? Your stop loss will be here. Above that, your stop loss will be taken. In that case, okay, so there are situations where this can be broken. So you can understand if it is going to be broken or not in most of the times. I'll discuss that rule. Okay, so if it is broken, then upon retracement, you will be taking a call trade. Similarly, if S3 is broken on the downside, then if it is retracing, you will be taking a PE on the downside. So this is applicable not only in case of R3 or S3, it is applicable in any resistance, any support. VWAP is also the same thing. So first you will go for a rejection trade. If it comes to VWAP or 200 EMA, if it is broken, then you will look for a support trade. What is the rule? Any support will, if it is broken, let's say this is a support. If it is broken, it will now act as a resistance on the retracement. Similarly, any resistance, if it is broken, it will act as a support on a retracement. Okay. So, the basic things are very clear. Now, let's look at the different scenarios. So here I have discussed the scenarios. These scenarios are support, resistance, breakout, breakdown. Now, different scenarios where the price is opening and other things is what we need to discuss. So, let's again consider a S3. Let's consider R3. Okay, upon market opening. Okay, so let's say the price opened exactly at the middle of this. So this is the first scenario. The price opened middle of this. So this is my first case. Second case will be the price is opening close to R3. So this is your second case. And your third case will be the price is opening close to S3. So this is your third case. And your fourth case will be the price is opening below S3. Below S3 is your fourth case and the price is opening above R3 is your fifth case. So I need to discuss these 5 cases. Also, I have to discuss price opening far away from S3. So this is your 6th case. And the price is opening far away from R3, which is your 7th case. So with this, I will be addressing everything which is connected with S3, R3. I will repeat, my first case will be, or the order can be changed, okay. The first case will be exactly between R3 and S3. So this is going to give a better probability trade. We'll discuss that. Second is close to R3, then close to S3. Okay, then below S3, just below S3, just below R3. Then far away from S3 and far away from R3. Okay, so this will be total 7 scenarios. So let's start with the first one. So what is the first one? Let's see. See guys, this I cannot explain with if I go to Zerodha chart or trading view. That's the reason why we are using this plain board. Okay, this will actually help you in a much better way to realize these different scenarios. Okay, so we will look at the 7 different situations. First one, the price opening here. The price opened here. This is like a neutral situation for us. Okay. So if the price is opening here, it's a neutral situation. And then any up move, okay, any up move, if the price comes here, you will be going for a short without any doubt. Now, in all these situations, I have to look at 2 different candlesticks. So that I have already explained. What are the 2 different candlesticks? Let's say this is your R3. I am looking for 2 different candlesticks. Color is not important for me. First, let's say I get this candle. Only thing is that it have to touch the R3 and the moment I start getting this wick, I'll enter. I may not wait for this entire formation. It could be 3 minute or 5 minute. You can look at both the time frame. If you need to get a fast entry, 3 minute, 5 minute also, it's up to you. Specific, there is nothing like that, 3 minute or 5 minute. The moment you see the rejection, you can enter. The stop loss will be like this. It could be from here. See, let's say what trade you will be taking? You will be taking a PE trade, right? So you have to look at the PE chart. So what would have happened in the PE chart? The price might have came and price might have made a formation like this, right? If you get a candle formation at a resistance level like this, here there is a wick at the top. So on your PE chart, there will be a wick at the bottom. So this is the low which is made. When that low is made, when the price reaches this resistance. Okay, so let's say this low is 215. And where you will be getting this price? You may be getting it maybe 220 or 221 or 22 like that. So in this scenario, your stop loss will be, it's either 210 or maximum 205. 210 or 205. So what is the low? From there, 7, maximum 5 to 10 points. So that is going to be a stop loss. I hope this is very clear. So first candle is that. Now, what is the next possibility? It made a candle like this and one more candle and you're getting one more candle like this. So first time, if you have entered half the quantity, this is the more confirmation when you're getting 2 candles like this. Anywhere, if I am getting two candles exactly like this, exactly touching here, it's not that breaking or going here till this and reversing. No, if it is exactly touching here and getting two candles like this, you can even go with the 3/4 of the quantity or the position sizing or even full also. So this candle, these two candles, if I am getting two candles from the rejection level, you should be going for it. So this is my first candlestick type. Second candlestick type is, guys, elder impulse I will discuss. Then I'll discuss in common to all the support resistance. That also you can apply here. Second candlestick is, I got a green candle like this. When the price is coming up, I got a green candle like this, full body candle which is touching here. Okay, or it might have crossed also. A full body candle which is coming crossing. I'll wait. I won't enter this trade. I'll wait. So this, it is broken, right? Now, what is the next possibility? It can come and it can take a support. Or if I need to get a P trade, I should get a red candle like this. And where is your entry? Your entry will be only here when the green candle low is broken by the red candle. So here only you will be taking a P trade. So these are the two candlesticks that I am looking for taking a PE trade. So this is my first scenario. When the price came here, I have to get any of this pattern. I will look for a PE trade. One more thing. When the price comes like this, you also have to watch where is your 20 MA. So I also have to look at 20 MA. If 20 MA is having an aggressive upward slope, and if it is very close to this, even this trade also I will avoid. Okay, if 20 MA have aggressive upward slope, if it is like this, then it's okay. But if 20 MA have aggressive upward slope, okay, which is like more than 45 degree, then I will avoid that trade. Second condition. So first is it should not have upward slope, aggressive upward slope. It could be flat. Even if it is not flat, anything else than less than 45 degree is perfectly fine. Looking at degree and everything is slightly difficult, I know. What you can do is you can look at the distance. Okay, what is the distance between 20 MA and R3? If at least in future chart, if this difference is at least 100 points, then no problem, you can enter irrespective of the slope. Because 20 MA is already having a power to attract the price. Secondly, R3 is a very strong rejection area. Okay, so considering this, what you can do is, if it comes to R3, look at the candlestick pattern. Look at how far is 20 MA, because it is not worth for you to enter if this is very close. Okay, if 20 MA is very close, you may get trapped, because there may be a small reversal and immediately it can give a breakout. Okay, so 20 MA is something which you need to look at. Now, where to book the profit? To book the profit, minimum you can get 20 points in this. You can look for 20 points in this trade. So half you exit at 20 points. It is up to you to be on a safer side. So you can exit at 15 point also, half of the quantity, but you should be trailing rest of it. That way you can plan where and how. All those things you can plan. You can keep the cost as a stop loss, then you can trail it, or you can keep exiting 1/4 also after getting another 5 points. Like that you can trail. Because R3 can come to 20 MA. Final booking can be done at 20 MA. First booking can be done at 9 MA or VWMA. Whatever indicators that we are using, we'll be seeing different indicators. Whatever you are seeing first, there you can book the first profit or look for 15 to 20 points. So rules are like this. Candlestick, I need to get these two candlestick pattern. Okay, either a rejection like this, first candle, there you can enter, or couple of rejection, this is very good. Or if you're getting a green candle, red candle should break the low of that. This is what I'm looking for. So I hope this is very clear. So candlestick is very clear. Entry, not a simple entry. This distance should be, when I say 100, it can be 80 to 100 range also. Okay, So the far it is, the better it will be. Far the 20 MA, the better it will be. I hope this is very clear. Now the next situation is opened here itself and then it got a negative move, down move. So once it came to S3, what you will be doing? Same. We will be expecting a support. So we will look for a call trade. Now what kind of candlestick pattern I should get here? Same. There is any support resistance trade I'm looking for. I'm looking for these 3 different candlesticks. So here I'm not looking at the color. I can get a red candle like this. I can make an entry, or I can get a green candle also like this. I can make an entry, no problem. So I can get 2 candles like this exactly from here. This is a very good scenario. I will make an entry with full quantity. Then what's the next scenario? I could get a very strong red candle. It can even touch here. Touching here is better option instead of breaking. And then what I need to look for? In this scenario, I should get a green candle which is breaking this high. Red candle high need to be broken. That's when I will look for a call trade. So candlestick is very clear. Then 20 MA. 20 MA should not have an aggressive downslope. I hope you understood what I mean by this aggressive downslope. 20 MA should not have like this aggressive slope. Now, if you have any confusion with respect to this slope, look for this 20 MA, the distance between 20 MA and this S3. It should be minimum 80 to 100 points. On futures, I repeat, this difference I'm talking about futures. Okay, which chart I'm looking at? I'm looking at futures chart. I'm looking at these 80 to 100 points distance. This distance, why this distance is required? Because 20 MA have a power to attract the price. The price tend to move to 20 MA firstly. Secondly, this will give us a support. So with this support and the power of 20 MA, it will move to that. So your ultimate profit booking, final profit booking should be at 20 MA, but you should start booking profits from 15 point onwards. So whatever is coming to the table, you should not leave it. Don't think that 15 point is very less because your stop loss is just this only. So in this context, what is your stop loss? Once the price comes like this and take a support as if I have shown here, your call chart will be like this. In your call chart, the price is coming and you can see there will be a support. So what is this low? Let's say this is 215. Stop loss should be 208, 205 should be the range. Look at the candle low of the call chart and keep a stop loss of max 10 points below this low. So I hope the first scenario is very much clear to all of you. You all understood. So that's all about the first scenario.